Are reverse mortgages scams? You see that. You see people, if you're surfing the web or if you're talking to your friend at a party, they might say, oh, I've heard about those reverse mortgages. They're scams. But then, if you ever ask the person, oh, yeah, that's interesting. Why do you think they're called, why do you think these reverse mortgages are scams? They will not give you a factual answer because they've just heard it. They've just heard something negative and they don't really have anything to back it up. But bad news and negative news travels very fast. So we're gonna break this down. The short answer is no, reverse mortgages aren't scams. They're heavily regulated by the FHA, but more than just tell you that and let you go, I'm gonna go deep into it so that you know what reverse mortgages are and what reverse mortgages aren't. And then in the end of this video, I'll invite you. You tell me, are these reverse mortgages, are they scams? Or are they just another mortgage product that's generally designed to help seniors live retirement a little bit easier? But before we do that, just introduce myself very, very quick. My name is Jason Eichmiller. I own and run Reverse Mortgage Reality. And since 2008, I've helped a little bit. Oh, there's the, there's the grass cutter guy behind me. Since 2008, I've helped a little bit over 460 seniors learn about and get reverse mortgages. So if you'd like, my contact information will be below, but really quick, my phone number is 888-309-9705. You can email me at jason@keyhomelending.com. Or if you'd like to schedule an appointment, go to Reverse Quotes, that's reverse QUOTES.com, and you can submit your information on desktop, it's on the right. And on a mobile phone, on your cell phone, you just scroll down and you'll see the information to set an appointment. Okay, back to the question, are reverse mortgages scams? Okay, so I'll tell you what a reverse mortgage is, and again, you tell me if you think this is a scam or not. So first of all, a reverse mortgage is just a mortgage. So it's a mortgage with flexible payment terms, and I'll tell you what that means. So with a reverse mortgage, either the lender gives you money to pay off your mortgage, or they give you some cash just to use for retirement, or sometimes they pay off your mortgage and they give you some cash for retirement. The difference between, really the only difference between a reverse and a forward mortgage is your payment schedule. So with a forward mortgage, you're stuck into making principal and interest payments 10 years, 15 years, 30 years, however long the term is. And you make payments and payments and payments, and eventually after this 30-year period, which is, I'm saying 30 years because that's the most common regular mortgage that there is out there. After 30 years, your mortgage is paid off and you're free and clear, but now you're living in a house that's free and clear that has all this equity trapped into it, and you can't get any of the equity out, of course, unless you do a reverse mortgage. So that's a regular mortgage. A reverse, kind of same thing. We pay off your mortgage, or we give you some cash, or a combination of the two, depending on whatever your situation is. And with a reverse, instead of being forced into monthly payments every single year for 15, 30, 10 years, however long it is, the mortgage lender says, you know what? You can make payments if you want. You can pay us off at any time, but we're not going to force you to do it. So most of the seniors that I've helped, and again, I've helped a little bit over 460 of them, especially in today's world with inflation as high as it is. We just got word that for 2024, the Social Security cost of living update or adjustment is going to go up a whopping about $50 for the average Social Security holder. It's the adjustment's 3.2%. So a lot of times folks are choosing reverse mortgages intelligently because they're on fixed income. It's not going up. It's not going up drastically. I mean, you're getting the 3.2%. But if you look at your grocery bill, at your gas, at all these expenses, your homeowner's insurance in a lot of states, these keep rising and rising and rising, and fixed income can't kind of keep pace with it. And then if you have more than fixed income, let's say you have investments, well, in the past couple of years, your investments have dropped drastically. So for a lot of folks, it makes sense that say, hey, I've got this retirement lifestyle that I want to lead, but now my expenses are just too darn high, and I don't have as much in the piggy bank as I used to have, so I don't know if I can survive as is. So that's why a lot of folks are turning to their home to provide a little bit of extra money coming in, whether it's monthly income, whether it's a credit line, whether it's paying off some bills. Every situation is, of course, different. But that's the reason why people decide to get reverse mortgages. Hey, again, to get some money, however you need it, and to not be forced into making those monthly payments. So, hope you're following me so far. If not, go ahead and ask a question below, or feel free to reach out and give me a call or an email. So, there we go. We understand how a reverse mortgage works. Now, let's look a little bit deeper in it. Now, you as the senior citizen, we talk about ownership, and one of the reasons why somebody might think a reverse mortgage is a scam is because they falsely believe that if you get a reverse mortgage, then the bank gets your home. And that, fortunately, is not true. So you as a senior citizen, you'll stay on the deed, you'll stay on the title. You have full ownership. Again, you can make payments if you want. You can pay it back at any time if you want. And if you don't make any payments, what happens is the interest just adds to the balance. So let's do you want me to do an example? We'll do an example here. So let's say that you get a $100,000 reverse mortgage. I'm using super simple numbers. And let's say the interest rate is 8%, which regular mortgage rates right now are in the 7s, so reverses are normally just a little bit higher than regular mortgages. So $100,000, you don't make any monthly mortgage payments because you don't want to, you don't have to. So what happens is the balance the first year goes up to 108, 116, 124, 132, 140. Okay? That's how the interest compounds. Every single year you owe a little bit more than you owed the year before. Okay? So the balance goes up, and once you either die or your spouse dies as well, because if you're married, if you pass away, then your spouse is fine. By the way, that's another reason why people are negative about reverse mortgages. They think that, hey, if you have a husband and wife and the husband dies, that the wife's out of the home, and that's just not true, especially with today's reverse mortgages. Now what happens is we will only do reverse mortgages with both of you on the title, or if one of you is under 62, which is the age for the hecm reverse mortgage or the FHA reverse mortgage. If you're under 62, then as long as you live in the house, you're going to be considered a non-borrowing spouse. So if let's say you have a 72-year-old husband and a 58-year-old wife, you can get the reverse. The 58-year-old wife is going to be on as a non-borrowing spouse. The 72-year-old husband is going to be technically the borrower. But if the 72-year-old guy, if he passes away, the 58-year-old, excuse me, even though she wasn't on the loan and she was too young for the loan, she still can't lose the house as long as she lives there and continues to pay property taxes and homeowners insurance. Okay? So the spouse is protected. Now, back in the day, 10 years ago, this wasn't so much the case. There was that, I forget whether it was 2013 or 2015. I've been doing this since 2008. Sometimes the years kind of all kind of blend together. But back then, there weren't protections for non-borrowing spouses. But now, there are. So if you get a reverse mortgage and your spouse is underage, he or she is okay. All right? So you stay on the deed, going back, right? You stay on the deed. You can sell the house if you want to. You can pay it off or down if you want to. And when the both of you pass away, okay? When you finally do not permanently occupy the home, which means normally that you pass away, then the house will go to whoever you will it to go to. So if you want it to go to your kids, great. If you want it to go to the church, great. If you want to go to charity, your aunt, your cousin, your niece, you get it. It'll go to whoever you want it to go to. They'll get the house, and they'll have up to 6 months to either refinance the house if they want to stay there. But most of the time they don't. They have their own house. They have their own lives. So if they don't want to stay there, they can sell the house. Now, whatever is owed on the reverse mortgage will become due, and it'll come out of the sale, and then they'll get the rest. Let's use an example. By the way, this is just like a regular mortgage, this case. So let's say that you got a $100,000 reverse mortgage, and when you pass away, your house is worth $250,000. and you've had the reverse for a while, so you owe $150,000, okay? Your kids are gonna get it. They're gonna say, we don't want this house, we'd like some of the money out of it. So they'll sell it for $250,000. The $150,000 you'll get paid back, and you do the math. How much are they gonna get? $100,000. Well, then they have to pay the taxes and the realtor and all that other jazz. But theoretically, they get $100,000 out of the house. So in that case, it acts just like a traditional reverse mortgage. Not too scammy so far, right? Just understand that when you don't make payments, the interest becomes due because it's not free money. That's what you need to understand. And myself as a originator, as somebody who walks you through the process, I help you understand that. We have paperwork at counseling that we go over. You speak with a counselor. We do paperwork at an application. We redisclose once an appraisal comes in, and of course you'll still see the exact same numbers at closing. So I am personally a full disclosure guy. I want to make sure that you understand everything about this program. So if you have any questions, by the way, if you think of any other reasons why people think reverse mortgages are scams, please feel free to comment them below. And if you'd like to learn how a reverse mortgage can work specifically for you in your situation, feel free to reach out to me. My name again is Jason Eichmiller. My phone number is 888-309-9705. There's Lucky barking again. Lucky, come here, baby. Come here. You can reach me. You can email me at jason@keyhomelending.com. Or if you'd like to, you can always visit the website reversequotes.com to schedule an appointment to chat. All right, I hope this helps, and I hope now you know that reverse mortgages aren't scams. They're just mortgages that have flexible payment terms. Hope this helps, and I'm here if you need me. Take care of yourself.